Hi everybody and welcome to the third in our series of technical webinars. Today we're going to be looking at understanding your payment reports for apprenticeships. And this session is primarily for training providers and employer providers, but other employers may find the information useful as well. I'm Nick Duff from the Apprenticeship Service on the Service Engagement team, and I'll be doing the hosting for today. Just to let you know that we're giving you a copy and giving you access to the slides today, so that you can refer back to them at the end of the session or after the session, and I'll tell you how you can access those towards the end of today. You'll also be able to access a recording of the webinar today on both our webinar platform and also on YouTube. And again, I'll tell you how you can access those recordings so that you can either refer back to them or you can get colleagues to listen in as well if you need to. I'm joined by a group of people today. Henry Morgan is doing our main presenting role today. He's the application support specialist in the Apprenticeship Service. And then we've got a few more colleagues that we can call on during the Q&A. So from the Apprenticeship Service, we've got Sam Miller. He's our Senior Business Solutions Lead. And we've got Sean Farlow, who, like Henry, is an application support specialist. And we've also got Niall Geraghty, who's the Operations Manager. And then we're also joined by Duncan Wannell, who's our in-year calculations senior manager as well. So hopefully we've got the right team to answer all of your questions. So welcome everybody, and thank you for joining us. We're due to last about 60 minutes or so, which will include the Q&A today. I think that will be sufficient time for us to go through what we've got to talk about. But can I just remind everybody that, as usual, when it comes to the questions, if you've got questions, we won't go into questions that don't relate to today's topic or are specific to your account or specific to an apprentice or ULN. For those types of questions, I'd really suggest that you contact the support desk. And if you want to know how to do that, I'll share the details again for the support desk towards the end of the session. We'll try and get through as many of your questions as we can, but obviously if we don't manage to cover everything, we'll commit to taking those away, the ones that we haven't answered anyway, and we'll get responses to you and send them out to everybody that attended today's session within about 4 weeks following the end of today. Okay, so to take us through our main input, I'm going to hand over to Henry. Henry, you there?
Yeah, hi.
Yeah, okay, thank you. Over to you.
Okay, so hello everyone. So today we are going to show you and discuss a number of payment related reports on the Submit Learner data site. And this webinar is designed to allow you to understand them and to allow you to understand if you are or you're receiving all the funds you've earned. We won't be going into detail on how to accurately submit an ILR return. We will talk about the ILR a bit, but that isn't obviously the purpose of this webinar. So to move on to the next slide, please. In this webinar, we'll discuss the 6 reports at the top here: the ILR rule violation report, the APS indicative earnings report, the apprenticeship data match report, the APS monthly payment report, the co-investment contributions report, and the additional payments report. You might also use the cross-year report, the learner level review, and the funding summary report. We're not going to talk about those during the webinar because the reports above in the top section there are the core ones, which would give you all the information to understand whether you're being paid or not. The reports below are additional ones which are useful, but they've been developed afterwards. However, if you do have questions about those, our panelists, or at least one of our panelists, will be able to offer some answers on that, so we can take questions about that. Okay, moving on, please. Okay, so the first report that I want to talk about is the ILR rule violations report. So this webinar is structured to show you where you find these reports on the Submit Learner data site, and then to go into some detail about the function and purpose of each report. So what we have on this slide is a view of the Submit Learner data portal after you've submitted an ILR. During the ILR submission window, providers can, of course, submit multiple ILR files, and each time you do so, you'll get a folder of reports appearing to the right of the ILR file, as can be seen from the arrow in this screenshot, so that download reports hyperlink. Within this folder, you'll find the Apps Indicative Earnings report for that specific ILR file, alongside the rule violation reports, both summary and learner level for that specific ILR file, as well as the apprenticeship data match report. There are lots of other reports in this folder, some of which refer to non-apprenticeship funding streams. The apprenticeship data match report generated here will relate to the latest ILR earnings generated. But as I've said, before we can talk about the Apps Indicative Earnings report, we need to look at the rule violations report. So if we could move on, please, thank you. So what's above is an extract of the ILR, what's in the slide is an extract of the ILR rule violations report with learner details redacted. The purpose of this report is to analyze your ILR file to determine whether the data you've submitted can be read properly by our funding calculation. If you look at the first learner of the report on the left-hand side, so that is on the report, it's column A, the column error, headed error stroke warning. Any learners appearing in this column with an E will not appear on the corresponding Apps Indicative Earnings report, and no earnings will be generated. So if there's a rule violation error that's not corrected, we do claw back all funding for the entire year. So to earn funding for the learner in the submission window, you need to correct the error in your ILR data and resubmit your file containing all your learners before the ILR monthly deadline. There's various information within the report to allow you to understand the error, such as the rule name, the field values, the error message, and the aim sequence number. The aim sequence number to let you know specifically which learning aim the error refers to. If you feel you need more information to understand the error, then the most detailed source of information about ILR validation errors is within the ILR validation rules document, excuse me, which is held at the hyperlink within the slides. This is a link to the ILR provider support manual, ILR specification, and the ILR validation rules, alongside some other technical documentation. The ILR validation rules is a big spreadsheet which lists every single validation error and warning, and sort of goes into some technical detail, but I find it is useful if you have any confusion. So any learners with a W in column A will appear on the indicative earnings report, and earnings can be generated, but the report is advising you to check that the ILR for this learner is compliant with our rules. Okay, if we can move on, please. So we're now going to talk about the Apps Indicative Earnings report. And if we can move on again, please, thank you. So before we talk about the actual report, it's worth taking a step back to talk about the difference between earnings and payments. So many of our reports talk about either earnings or payments, and we have two separate calculations in our systems, one for earnings and one for payments, which run at different stages in the process. So for earnings, we use this term to mean the total provider funding which apprenticeship activity generates. The provider could receive this from either the ESFA or the employer, and earnings are calculated before this split can be evaluated. Earnings are calculated without reference to the Apprenticeship Service and are based on the ILR. So the earnings is the APPS indicative earnings report. Payments. These will appear on the Apprenticeship monthly payment report. These are calculated after each ILR collection closes from earnings. The payments take into account data matching and employer levy balances on the Apprenticeship Service. The payments calculation calculates how much the ESFA will pay you and how much co-investment the employer must contribute. Okay, if we could move on, please. So the question that could be asked then is, why don't we calculate all this when the ILR is submitted? So the answer being, if an employer has apprentices with multiple providers and runs out of levy that month, the funding for provider A can depend on the activity in provider B. For example, a cohort of apprentices could complete at provider B that month, meaning there's more money paid out because the completion is obviously higher than normally, almost always higher than the on-program earning. And that leaves no levy for provider A's apprentices. So we wait until period end when we have all the ILR data for all the providers together. We apply a priority order of providers to increase stability from month to month. Employers can edit this priority order in their Apprenticeship Service accounts if they want to. Also, employers can make changes to resolve data locks and therefore affect payments after the ILR has been submitted, but before the ILR collection closes. Okay, if we could move on again, please. Now I'm going to talk about the APPS indicative earnings report. So this report is a detailed report of earnings produced after an ILR submission. It shows cash figures for earnings and related ILR fields. It shows a row for each learning aim in your latest ILR file, except in cases where you negotiate a new price during an apprenticeship, for example, a change of employer, where we would show multiple rows for one learning aim with different prices. It shows cash values for the months August through to July, corresponding to when activity took place, because it's related to when you earned the money, or is due to take place, because when you submit an ILR, it forecasts for the whole year, all 12 months based on that ILR submission. As this is a report of earnings, not payments, this report does not always reflect what the ESFA will pay to you. It doesn't account for the effects of data matching and levy balances, etc., which obviously can influence what's paid to you. Okay, if we can move on. It also, let me just add one thing, it doesn't also account for allocation or contract issues. I think we'll talk about that a bit more later. Okay, if we can move on, please. We have already moved on. This slide is effectively what I wanted to do. If you're not familiar, is for illustrative purposes, this is a very simple version of the earnings calculation for a funding year, where all we're paying in this case is the on-program payments for an apprenticeship. So I'm just going to grab a bit of water. And no maths and English or other additional payments are made. As the APPS indicative earnings report has a large number of columns, I am not presenting it here in its actual version. You'll submit an ILR file and the APPS indicative earnings report will lay out the earnings for the year. On-program payments are divided equally over the planned months of your ZPROG 001 aim in your ILR. So the ZPROG 001 aim, if you're not familiar with the details of the ILR, is the generic aim which describes the whole apprenticeship in the ILR. Those on program payments or earnings are laid out between the learning start date and the planned end date. A monthly on program earning is generated in the first calendar month, even if only one day of learning takes place, which means a monthly on program earning is not generated in the last month if this is a partial month of learning. So 20% of the total negotiated price is held back to be released upon completion of the apprenticeship, whether it's a pass or a fail, but obviously not in the case of withdrawal. And the report provides a forecast of the entire academic year's earnings, as I've said, based on the specific ILR submission. As such, if funds are forecast to be paid throughout the year, the report will show funds due for the whole year. So in the specifics of the learner referenced above, we have a total negotiated price of £3,000 at the top there, TMP1 and TMP2, adding up to £3,000, with 20% or £600 removed for completion. The rest is divided across 24 instalments, so £100 a month, as we can see, they're laid out across the 12 months there. Okay, so if we can move on to the next slide, please. Okay, so what we just wanted to talk about in this slide is the concept of price episodes. So what's above is a modified illustrative version of the APS indicative earnings report. It's just showing a selection of columns that are highlighted with the actual column reference as per you'd find in the report. Excuse me. So what we have here is an apprenticeship program aim, ZProg 001, which started in May 2022 with a planned end date of March 2024. The completion status is 1, meaning the learner is a continuing learner, and we have a number of planned installments at 24. And this is, as I say, this is year 1 of the apprenticeship. As you'll see from the bottom row, the price episode start date is the same as the learning start date, column BD. Price amount remaining with the upper limit applied at the start of this episode, that's column BJ, is the total price from the start of the apprenticeship. Okay, so that's all obviously fairly straightforward. If we move on to the next slide, please. Thank you. This is now year 2 for the same learner, beginning 1st of August 2022. If we focus on the bottom row here, we can see that the price episode start date is now the 1st of August 2022, and because 3 on-program payments of £100 were drawn down in the 22-23 academic year, the price amount remaining with upper limit applied at the start of this episode is £2,700. So basically what this is showing you is that that £300 that you earned last year is no longer available to you because of how you submitted your ILR in the previous year, which is what we'd expect. Okay, moving on again. Wanted to touch on something else with regards to the APS indicative earnings report. The columns above, some of which have been referenced in the previous 2 slides, can be very informative when your earnings are not what you expect them to be. We do get some queries about this when providers are seeing their earnings are not what they expect. So in the example above, we have an apprenticeship in year 1. The total price applicable to year 1 is £3,000. Which is what you put in your ILR. The funding band limit, as per BH, is also £3,000. This being the maximum amount which can be released for an apprenticeship of this type per learner. That's the funding band limit, is £3,000. However, in this specific case, you are, as per column BI, you're £500 above the funding band limit. You would ask how that can be. And this would be because a provider, be it yourself or a different training provider, has already returned funding for this learner on this apprenticeship on an indicative earnings report. And it's important that these earnings only have to be on the indicative earnings report. They don't actually have to be paid out. And because they've claimed that money, that means that those earnings are not available to you. This then lowers the amount you can be paid for this apprentice and will lower the value of your earnings and payments. So we can see this when there's been a change of provider scenario, and the second provider may not know exactly how much they're allowed to claim. It may be an estimate or something, and that's just an example where that can occur. Okay, and yeah, if we can move on, thank you. So what I wanted to do is, just because this report does have a large number of, it's a big report with a large amount of data, what I wanted to show you is that some learners will have a large number of rows displayed on the indicative earnings report than other learners. These dedicated rows will be composed of a line for each learning aim recorded in each learner's ILR. So there will be every time you add every aim you add to your ILR will show up in the report, but funding will only show against the ZPROG 001 aim and the maths and English aims. So you've got the ZPROG 001 aim, the maths and English aims, and if you are involved in submitting the ILR, you'll know that you are required to, or supposed to, include, well, you are required to, as per the specification, include either qualification specific aim or a learning aim class code. So the qualification specific aim related to the apprenticeship as a whole, other than maths and English, or if there aren't any certified qualifications, you'd record a learning aim class code. Okay, so yes, if we can move on, thank you. And this slide is designed just to show you, if you haven't used this APPS indicative earnings report before, that for each month you would see all of these columns for all the different types of earnings. The slide, yeah, gives a brief, detailed breakdown of all the columns on the indicative earnings report for each month. For all of these types of earnings, the funding earned will show against the row for the ZPROG 001, with the exception of the maths and English aims. So you obviously, English and maths on program earnings and balancing payment earnings will appear against the English and maths row, and learning support earnings can appear against English and maths rows. I think a scenario where that would happen is learning support is continuing and you're after the planned end date of the Z program. So those funds can appear against the learning support earnings can appear against English maths rows in those contexts. So we can move on again. Thank you. So the apprenticeship data match report. As we said, this appears when you are seeing your earnings. It also will appear when after the ILR window closes. I'm not going to spend much time on the data match report. We delivered a 1-hour webinar on the subject of data match in September, which is on our YouTube channel. So I'm not going to spend much time on this today. However, if you don't know, the concept of data match is simply that the ILR and the Apprenticeship Service must match in a number of areas in order for the Apprenticeship Service to allow payments to be released. This is to check that your funds you are claiming via your ILR are the funds your employer agrees to pay you. Of course, any legacy apprentices you have who are not featured on the Apprenticeship Service, those recorded as ACT2 in your ILR as opposed to ACT1, will not feature on this report. So ACT1 for learners on the Apprenticeship Service, ACT2 for your legacy contracts, if you have legacy contracts prior to the Apprenticeship Service. for learners, we're not added to that. A version of this report is generated each time you upload an ILR file, and a version is also generated after the ILR period end in the period end reports folder, which we'll talk about later. As such, if the report exists at various points of the payment cycle, so you get an up-to-date view of your learners who are not matching between the ILR and the Apprenticeship Service. Okay, if we can move on again, please. Thank you. Okay, to now talk about the period end reports. Okay, and the next slide, please. Thank you. So this screenshot is a view of the submission history section of the Submit Learner data site. After an ILR period has closed, so after the 4th working day of the month, the final ILR file and other reports related to the period will appear in this section of the site. So you'll see that within the R14 section there, you'll see an ILR reports folder. So those reports will appear there. Those are reports that you would have already seen during the submission window. But then on the 6th working day of the month, it is normally the 6th working day. It might slip one day either side potentially, but it is generally the 6th working day. You get the period end reports folder. Excuse me. And I've included just a screenshot of what's inside that folder. So in the top right hand corner there. So the apps monthly payment report, the co-investment contributions report, and the apprenticeship data match report will appear in the period end reports folder, which takes a few days, which I said will appear around the 6th working day of the month. Okay, if we can move on, please. So the apps monthly payment report. So at first glance, the apps monthly payment report looks very similar to the apps indicative earnings report. There are a number of important differences. So as we've made clear, it's produced at period end. So the figures here will show you what you will actually be paid for the current month and for past months in the funding year. What's key to understand here is that you may say you've missed a learner out of your ILR submissions for 3 or 4 months of the funding year. Those ILR submissions on the indicative earnings report will obviously still be laid out across those earnings will still be laid out across the individual months of the indicative earnings report, but in the apprenticeship monthly payment report, if you're paid, they will all appear within 1 month. So you get a bulk amount. And if you have funds been held up by data lock, again, you would get when that data lock is resolved, you will again get a bulk amount appearing on the app's monthly payment report. So I just wanted to touch on that. In some cases, so I've talked about, I'm just going to, apologies. The report uses collection periods 1 to 14 rather than the delivery periods used in the earnings report, as you can be paid for apprentices over 14 returns, the R13 and R14, of course. This report should match more closely with payments made to you as the provider. Cash values and periods in this report should also correspond to transactions which employers see in their levy accounts. And for 23-24, the employer name has been added to the app's monthly payment report as an additional column. Okay, we can move on, please. So, for employers on the apprenticeship service, which includes all new starts, all apprenticeship starts from April 2021, and obviously for levy dating back to May 2017, the earnings calculation on the indicative earnings report does not attempt to determine whether the employer is classed as levy or non-levy, because it obviously can't. This extra information is added to the funding line type in the app's monthly payment reports payment calculation, which means different funding line types are shown in this report. This report shows the same contract numbers which are shown in remittance advices. If the report shows no contract, assuming the cash value is an amount, so if this report shows no contract, this indicates that we have not found a matching contract which would be used to pay this payment. So we would suggest you check the ACT codes in your ILR. We also have a non-contracted apprenticeships activity report to help identify these apprentices. There are some other reasons why values for this report may not agree with payments. So if you have claimed funds via the earnings adjustment statement, which is, if you don't know, is a way that the Department for Education will allow you to claim money where it's not possible to claim it via the ILR. We would give you permission to do that in these specific cases. Earnings adjustment values do not appear on the app's monthly payment report, as the report is derived from ILR data. And if you have any older non-apprenticeship service, apprenticeship contracts prior to the learners being added to the apprenticeship service, there may be a allocation capping in place, which may mean that the total of cash values in this report would not correspond to the payment we make to you. We would cap it after the value appears on this report. Okay, if we can move on, please. So this may be useful to you. Why do my earnings not equal my payments? So if you total your earnings on the indicative earnings report and then you total your payments on the monthly payment report, the reasons could be you have a data lock showing on your apprenticeship data match report, which is blocking some or all of the payments being released. If data locks are removed before the R14 deadline of the relevant year, funds will be released. If you have a completion earning due and have not recorded as collected via the PMR codes in your ILR, all the required co-investment to release this payment to you, then we would withhold a completion earning. There may be something wrong with your ILR is the third reason. So you're not generating an earning on the indicative earnings report. And the difference between earnings and payments may vary by up to 10% to take into account co-investment contributions due from employers. So I think it's from April 2019 onwards. For new starts from April 2019 onwards, the co-investment contribution rate was changed to 5%. Prior to that, it was 10%, where it was due. To be paid the completion element, you must have collected and recorded at least the amount of co-investment required for the whole program up to the month before the completion payment is due. To be paid the completion payment, you do not have to record in your ILR any co-investment which might be required related to the completion element itself. So that is worth saying. Okay, and if we can now move on, please. Thank you. Just want to talk about the co-investment contributions report next. So what's in the co-investment contributions report? It shows co-investment contributions which we have calculated that employers should be making, co-investment contributions recorded in the ILR, as I've said, PMR values, completion earnings and completion payments. So that completion earning is obviously useful there. It's a detailed report produced after the collection period end and only includes a subset of learners, those for whom co-investment is due. I think this is, I think, particularly notable. We'll catch people out. Employers who are funded via levy can run out of levy funds without any warning. They may not have a very large levy balance, or technically speaking, that they may accidentally undeclare their levy to HMRC, which would then significantly reduce their levy balance. And co-investment contributions therefore may become due unexpectedly. Therefore, it's wise to regularly check your co-investment contributions report. You could obviously check it every month, then you won't miss any additional learners, being added to that report. If you have a scenario, this is a niche scenario, but if you have a scenario where the ULN has changed over time for an apprentice, you would need to filter this report by learner reference number to find all the co-investment contributions due, because they would appear, you'd have two ULNs, and if you filter by ULN, you'd find two separate rows. If you only filter by ULN, you'd only find one row. So if you filter by learner reference number, you'd pick up all of the co-investment contributions. Okay, if we can move on, please. Okay, for 23-24, there is a new version of the co-investment contributions report available, which I thought was obviously worth mentioning. Tab 1 is an introduction to explain the various tabs. Tab 2 is what's on the 22-23 report, and tab 3 will be a new data set which splits up an apprenticeship based on when we generated funding for each employer. The aim is this would be useful for apprentices with multiple employers over one apprenticeship. The logic for the generation of tab 3 is not yet finalized. As such, at R01, if you've looked at this, you would notice that tab 3 has column headings, but otherwise blank. But obviously, we will be populating that soon. May as well add, if you 22-23, you may have noticed there were two versions of the co-investment contributions report. One labeled as beta. These were effectively identical versions, but obviously this was related to the development activity I think the reason there is related to the development activity that's going to happen in 23-24. So if we can move on to the app's additional payments report. Now, because I anticipated we might be quite tight for time, I haven't put a lot of content about this report, but it will only show learners for whom additional payments are due. So this would be, or I beg your pardon, so this would be for employers or providers where these payments are due. So the £500 payments that you can get paid for certain learners at 90 days and 365 days. And it will show earnings and payments for these learners. And it also shows the care leavers bursary when money is paid to you, the provider, to pass on to the learner. Now, you may or may not have noticed that in care leavers bursary has increased in 23-24 to be £3,000. Now, in fact, this report isn't actually going to change for 23-24, but this is something that we need to make you aware of. The care leavers bursary value of the value that will be paid at 60 days, which is the initial £1,000, that will show on the report as it did in previous years. The additional £2,000, which get paid at 120 days and 300 days, will not actually appear on this report due to the, it couldn't be implemented quickly enough, unfortunately. But that additional £2,000 will appear on remittances that you are sent as the training provider. So where you have learners who've applied for the Care Leavers bursary, you would need to check your remittances to see that additional £2,000. Okay, if we can move on, please. The next two slides are, I've written them up for people who've not used these reports before. I'm not going to read through them because the things you can read through in your own time. But basically, the first one is just a basic guide on which columns to refer to calculate your total earnings for either a period of months or for the entire year. And I've called it Annex 2, is a guide for how you can use which columns to highlight in the indicative earnings report to compare to and then look at which columns to look at on the monthly payment report. As I say, this may be useful to you if you're not familiar with these reports. So that was all I wanted to say, but with the exception that if Nick's obviously going to talk a little bit more, but in the slides towards the end of this pack, we've included 2 links to 2 documents which are specifically about this area. We've got the technical funding guide, and then there is a document about how these reports work, and they're in links towards the end. That's it for me for now.
Okay, thanks very much, Henry. Loads to go through there, and sort of some really complex stuff. I mean, the stuff I didn't appreciate in the report. So thank you for going through those and giving us some clarity on that. That's really great. So we'll look at the questions that you've got that have come in. We've had quite a few, some not necessarily relevant to today's topic, which we might skip over, and we've had some useful suggestions as well about how reports might be restructured or simplified in the future. And what we'll do is we won't comment on those, but what we'll do is we'll take forward those comments and give them to the teams responsible for the production of the report, so that they can take that as useful user research and hopefully try and build that into any future iterations of the report. So we will pass those details on. So thank you for those types of questions. So just having a look at the questions that we've got, then, okay, so the first one, Duncan, if I could ask you, is there a way of getting an indicative amount for R14 from any of the reports?
Sure. So it depends what you mean by indicative amount, really. As Henry described, there's a separate concept of earnings and payments. Earnings are inherently quite indicative. So the way the earnings reports will work is they effectively show you the value of the learning in your ILR file for the whole year. So if you submit your ILR in August, your your earnings report will project your earnings out from the August that you submitted until the July closing the year. So you can get an indicative amount that you'll have by R14 for the whole year based on the ILR file you submitted. Obviously, that won't include any learners that aren't in your ILR yet. So if you know some are coming on board but aren't in your ILR, those won't be included. And also if any withdraw, that won't be included, things like that. In terms of payments, payments are inherently point at time. So there aren't any reports that can project your payments forwards. But what you can tend to do is if you've got learners who are not data locked, you can be reasonably confident that you're probably going to get paid for them unless there's a data change coming. As long as your co-investment is being collected on time ahead of your completion payment being due, you can have some confidence about that too. But there's nothing really that projects that, because it does depend on things that can happen between the current month and the next month when your next payment comes in. I hope that helps.
Okay, thank you. Sean, a couple of questions for you. There's a question about shortfall on co-investment around the time, well, actually after Gateway's been launched, and that you know they could launch and then find out the same month that there's a shortfall. How does that impact on a provider? What can they do from the reporting perspective to mitigate that?
So essentially, in terms of being able to receive your completion payment, what needs to be collected from the employer is any co-investment that's due on the on-program earnings. And providing you've collected that and evidenced that in your ILR, in your PMR records, then you would receive that completion payment, obviously subject to things like data locks that Duncan's just mentioned. There may well be co-investment that's due on that completion payment. Obviously, you would then need to kind of collect that from the employer to kind of receive that full amount. But as I say, in terms of actually being paid that completion, it's just the co-investment that's due on the on-program earnings. Hope that answered that question for you.
Okay, I've got a couple more for you then, Sean, as well to follow on. Does the indicative earning report project earnings ahead for the year or just up to the date of the ILR submission?
Yeah, I think Duncan did cover that one, but essentially once you've submitted an ILR, the indicative earnings report will project your earnings up and up, you know, from that time you submit up to R12. Obviously, you know, as periods go on through that month, if you've got changes of employer and you're recording things like TMP3 and TMP4 records or withdrawals, then obviously those projected earnings will change once you start recording those things in your ILR. But yeah, it does go from the month of submission up to R12 in that earnings report.
Okay, thanks. And then a question about double payments in the first month. Do providers no longer receive a double payment for that first month?
I'm not sure what's meant by the term double payment, but just to kind of explain how that works in terms of earnings and obviously payments, again, for that first month, you would receive a payment irrespective of the date that the learner starts. So if a learner starts on the last day of the month, the 29th, 30th, 31st of the month, you would receive a full earning for that month and obviously a full payment for that month. After that, you only get an earning for full months. So let's say a learner withdraws on the 27th of the month. Because that's not a full month, then you wouldn't get an earning for that month.
Okay, cool, thank you. And then, so one more for you, if I may, Sean. So would a learner have more lines in the report if they completed an apprenticeship with us and then started another one at a higher level?
Yeah, absolutely. So the rows that appear on that indicative earnings report, you would get a row for each learning aim. So if you've got two Z progs in your ILR, for example, one for a level 2 and another one for the level 3, then you would definitely get two rows on that earnings report. And again, if you've got things like a change of employer within a learning aim, so you've got a TMP 1 and 2, and then you've obviously got a TMP 3 and 4. For your change of employer, then you'd get 2 rows on that indicative earnings report for that learner.
Okay, thank you. Duncan, a couple for you. What about clawbacks in funding after a break in learning has been processed? Which report shows that?
So it'll be your APPS monthly payment report which shows that. What would happen there is, say you recorded a learner in learning from August to December. With no data locks and recorded timely, you'll have earnings and payments that are the same for every month between August and December. But then if in January you record a belated break in learning between September and November, your APPS monthly payment report would then in January show a clawback to cover off the recovery of funds that need to be taking place. It could be that if it's just 1 month that's clawed back, and your learners come back into learning, that it nets off to 0 monthly payments. But your year-to-date earnings should equal your monthly payment reports. So your monthly payment reports is where that clawback is shown.
Okay, thanks. Another one. The question about will the employer name be the current employer for the month of the payment?
So this is something we're still actually looking into a bit at the moment. I would be very keen if anyone's got any strong thoughts on what would be useful to them, for people to put some thoughts in the chat. We'll be doing a bit of research with providers as well, just to understand how best to display this. We do have some opportunities to do things there, but there are certain technical limitations as well. So the end implementation will be described in the reports guidance, but we haven't settled on an end implementation there yet.
Okay, if anybody does have any preferences or strong thoughts about that, if you can just drop it into the question box thing, then we won't cover that at the end, but we'll try and take those away with us and hopefully help to influence the report. Okay, Sean, a couple for you. Does the bulk payment get taken from the employer when a DLOC has been resolved or a late submission to the ILR due to the ILR errors then being resolved?
Yes, it does. So essentially, if you've got, 4 months where you've got a data lock for a particular learner, if in month 5 that data lock is resolved, then essentially in month 5 you would receive kind of the equivalent of 5 monthly payments in that 5th month.
Okay, right, I'm going to read this one out word for word. It's quite long. So we've got so this provider has an employer who they've recorded in the ILR as ACT1 as levy. However, on the APP's monthly payment report, they show as non-levy. Why is that happening, and how could it be rectified?
Okay, so when the apprenticeship essentially first started, we just had levy on the apprenticeship service. Nowadays, we've got levy and non-levy, which are all funded through the apprenticeship service. So in terms of those ACT codes in your ILR, an ACT1 essentially means any kind of learner that's funded through the apprenticeship service, either levy or non-levy. An ACT2 is an apprentice who's kind of funded through a provider's contract with the ESFA, so your contract for services, essentially. So ACT1, kind of effectively, I guess what I'm saying is ACT1 doesn't just mean levy now, because of the fact that non-levy are also on the apprenticeship service.
Yeah. Okay, thank you. And I don't know who to ask this question to specifically, but we've had a couple of iterations of this question, and that's about knowing whether or not how does a provider know if a learner's been on a program with another provider and or what funding is available to them. Is there any way that shows, or could anybody comment on that question? Or is that what we take?
I can't give you a scientific answer to that, but obviously in some scenarios the provider change team would be involved. In other scenarios you might be you may be aware that there was a previous provider, so there is obviously the possibility of communicating with that provider.
But there's going to be nothing obvious through any of the reports that indicates that to the new provider.
That's correct, yeah.
Okay, cool. So one that we can't necessarily answer for you, but we can certainly take that away and provide that feedback that is actually causing some not concern, but some interest in having that information represented somewhere, somehow. Sean, question for you. What happens in this scenario that there's a lack of co-investment in funding that happens right at the end of the ILR and doesn't get paid before R14?
So essentially, the only time we check whether you have recorded sufficient co-investment in your ILR is at the point that we come to pay that completion earning. And essentially, as long as it's recorded in the ILR by that time, everything's fine. So if you've not recorded it in your ILR by R14, that's not the end of the world. As I say, the only time we validate that and kind of sum up what you've recorded in your ILR versus what we believe is due to be collected is at the point that we come to pay that completion earning.
Okay. And then on the completion payment point, there's a question about the holding back completion payments due to missing co-investment and whether there's a tolerance applied. This particular provider has noticed that there's a rounding. So some payments are at 99%, but we've still been paid the completion payment. Is there a tolerance to negate the rounding issue?
there currently isn't a tolerance. This is something that we have kind of been asked by a number of providers, and it is something that we're having a little look at to see whether that's something we can implement. Obviously, I can't guarantee anything at the moment, but yeah, that is something that we're potentially having a look at.
Okay, and if it's all right with people on the call, we've got sort of 4 minutes left of the original time, but if I can steal a couple of extra minutes just to go through a couple more questions, I hope everybody's okay to hang on for that. So Duncan, can you invoice an employer for the full 5% upfront after the 42-day qualifying period?
Yes, you absolutely can. We don't dictate to you how you collect the money from the employer. The main things to consider with that, though, are the fact that co-investment contributions can change over the course of your apprenticeship you're delivering. So I'm sure many of you are familiar with a levy-funded apprentice that falls into co-investment because the employer's run out of levy. So in that case, you couldn't assume that there's nothing and not collect anything. You need to keep an eye on your co-investment report just in case there's money generated. But in the case of a non-levy learner too, it can be that an apprenticeship that's tagged as non-levy funding line type with a non-levy employer at start, if that employer becomes levy and start generating and declaring levy to HMRC, it could be that during the course of that apprenticeship, that apprenticeship is starting to be paid by levy despite being non-levy tagged. So that's another one to be careful of. It's good to keep an eye on your contributions report. Basically, you can invoice up front, but if you end up overcharging by the end of the apprenticeship, you'll need to pay that back.
Okay, I skipped over a question inadvertently, so I'll go back to that one. So if you are delivering apprenticeships to your own employees as a levy employer provider, and you run out of funds, do you have to co-invest and make the payments to ourselves? So currently, this particular person who's asking the questions codes them all on the ILR as 356. Is that the right thing to do?
That's absolutely the right thing to do, yeah. And you do not need to pay yourself as an employer provider. We understand that's kind of extra bureaucratic, so the coding of LDM 356 will exempt you from co-investment for the period that you are acting as the employer and the provider to that apprentice.
Okay, and question about the care leavers bursary. Do you have to apply for the care leavers bursary? Is it automatic like for the 16 to 18-year-old payments? Can you explain that process?
So a bit of both is the way I describe it. You of course have to code your ILR correctly, and that's the way in which you kind of apply for it, I suppose. The key is making sure that you are recording them as EF4 coded. That indicates that they are eligible for the care leavers bursary in the ILR, and as long as that's recorded, both the initial 60-day payment will be made to you and the follow-up payments if they are eligible for that too. One other thing to bear in mind with the care leavers bursary though is it's only earned on the first apprenticeship an apprentice does. So if you have a care leaver and they're doing a second apprenticeship, they may not be paid for that.
Okay, thanks. And on the co-investment report, is there a filtering facility? This provider wants to see levy employers to see whether they're running short in their levy account.
Yes, there is. I think we added it last year. There is a field called, has this apprenticeship been funded by levy or a levy transfer at any point? Now, that's very specific wording. It's not the same as levy employer, but levy employer doesn't indicate whether or not they've had any co-investment relation. The thing we've tried to capture with that field is the interesting scenario where they are non-levy and something weird has been happening and they've been funded by levy as a result, or whether they've been levy and they've therefore been funded by co-investment. It's that sort of scenario we're trying to bring out with this field. So has this apprenticeship been funded by levy or a levy transfer at any point? We'll show you those cases where some proportion of that apprenticeship at least has been funded by levy or a levy transfer, and therefore it's probably not going to be the full 5% or 10% if it's an earlier apprenticeship co-investment that you can charge. Open to feedback, of course, on that field and anything else you'd find useful in that report. But the co-investment is driven by whether the funding source, whether it's levy or co-investment, rather than the employer type directly.
Okay, I'm just going to do 2 more questions if I can. We'll have one for you, Duncan, as well. So if we've got a levy, we've got a learner with a price under the upper funding limit, but is shown as a price amount 4,000 above the band, do we need to reduce the negotiated price by this amount?
So you don't need to reduce the negotiated price. The negotiated price is when you negotiate with your employer. The ESFA and the DFE have no say in that. There is certain guidance about how you should record your negotiated price in the funding rules, so take care of that. But your negotiated price itself is how much you value how much you've negotiated for the cost of the apprenticeship to be delivered. So at £4,000 in that circumstance, I think it was £4,000, wasn't it? What we're saying there is that we, the ESFA, won't fund you that £4,000, but you are perfectly entitled to claim that from the employer, as that's the price you've negotiated with the employer.
Okay, thank you. And then one last question, Sean. Does the apprenticeship indicative report predict achievement payments in the future, or just OPPs? Sorry, I'll do that again. The app's indicative does not predict achievement payments in the future, just OPPs. Is that correct? That's actually the question.
Okay, so at the point you first record your learner in the ILR, the indicative earnings report will predict your on-programme earnings. The completion earning won't appear in your indicative earnings report until the point that you record that achievement, because obviously it needs to know what month that earning is related to.
Okay, cool, thank you. So we've run out of time for questions, and we're running slightly over. So
Nick, could I just quickly mention something? So in terms of the question I answered about how providers can know how much a different provider has drawn down for the same apprentice on the same apprenticeship. Another sort, people have commented in the chat, which makes a lot of sense, and I didn't mention it. Another source of some information would be the personal learning record on the learner record service. It's just worth adding that.
Yeah, and I think that really helps. Thank you, Henry, for that. So we're running slightly over. So what I'm going to do is I'm going to whistle through the remaining few slides and let you know how to get hold of the handouts and the copies of the slides for today. So if we can move on to the next slide, please. Just a very quick reminder that we've got one more of these technical webinars that are still to come, and that's about recording a grade and certification. So if you haven't registered already, you can do, and I'll give you the link in a sec. It's on the screen now. But if anybody else in your organisation would benefit from listening to that webinar, I'll provide that link to them. It's on the 30th of November at 12 till 1 o'clock in the afternoon, and it's live now, so people can go and register if they want to. In terms of the videos, we've said that all of our recordings for webinars go onto our YouTube channel. That currently sits in the Department for Education YouTube channel, but we'll be moving to @DFE Sector Comms in the very near future, but we'll let you know when that happens. But currently, all the webinar recordings are available in the Apprenticeship Service webinar recordings playlist. All the support videos covering different functions of the Apprenticeship Service are using the Apprenticeship Service playlist, and then we've got a couple of other support videos for apprenticeships in the apprenticeship support video playlist. So we keep adding stuff on there. We'll add this one in a few weeks' time. Make sure you go and have a look at that channel to get hold of the copies of the recordings. And then in terms of further support, so if you go to the handout section of your control panel, so around where the questions are, you'll see a handout tab, and you can get a copy of today's slides from there. And there's also a handout showing all the different links that have been referred to throughout the session today. You'll get, there's a link to apprenticeships.gov.uk, so you can obviously get lots of information about the apprenticeships and the apprenticeship service from there. We've also got links to the technical funding guide, the gov.uk page where you check the ILR reports for errors, and the submit learner data service as well. So you've got the links that we referred to. To register for any future webinars, like I said, the link to the webinar page is on there. And by the beginning of next week, we'll have a recording of today's webinar available from that link as well, so you can get it from there, and also from YouTube in a few weeks' time. So let's have a look. We've also then got the further education and training providers community link there as well, which is that peer-led discussion forum for providers where you can get information and support from your peers. And then finally, if you've got any specific questions about the apprenticeship service or any learners in particular, you can go to the self-service support tool, or you can email the support desk as well, and the details are on screen. So that's the end of our session. Sorry for rattling through those last few slides really quickly. Thank you so much for joining us. Thank you for asking lots of questions, and thank you for the presenters for their knowledge and their insights. That's really helpful. Please do remember as you leave to complete the short survey, and yeah, thanks for that, and I'll say goodbye. Enjoy the rest of your day. See you later. Bye.